Precious metals investing. A lot of folks are interested in precious metals and naturally have questions about what the metals are, what the price trends are, and how to invest. Let's consider gold in particular. Gold has been a universal symbol of wealth for civilizations throughout the years. Ancient cultures created gold jewelry, and early forms of money were crafted from gold. Through thousands of years, there has been a fascination with gold, and that fascination remains as strong as ever. Investing in gold and other precious metals has been attracting a lot of attention lately. You've probably heard of the ads proclaiming gold has never been worth zero. That's true, as there is an intrinsic value, a monetary value for gold, and it has been that way in human history for millennia. Gold bugs would have you believe that at some point in the future your money won't be worth the paper it's printed on. That's an interesting argument, and there's certainly a lot of folks taking a hard look at that these days, especially with the rapid increase of fiat currency printing in the US and Japan and Europe. Based on what has happened in world economies over the past couple of years, their argument and their concern is really gaining a lot of credibility and popularity in investment circles. We're going to take a look at a few topics that are important to this topic of investing in precious metals. Those are the types of metals, why buy precious metals, the price history, ways to buy, and then just a summary where we look ahead. What are the types of precious metals? Well, there are four. They are gold, silver, platinum, and palladium. Gold, in particular, is a popular metal and attracts most of the press, but it isn't the only metal out there. The three other metals are, as we said, silver, platinum, and palladium. All of those have risen in price over the last several years as demand has increased around the globe. While many people associate precious metals with jewelry and coins, these metals also have an industry use. Recently, the emergence of China and India as significant global players in the world economy has contributed to a higher demand for industrial purposes, as well as a huge increase in demand for China for gold. It appears that China is building their gold reserves to perhaps create a gold-backed yuan in the future. The yuan is the currency in China. Gold is a critical element in the electronics industry, and it's an integral part of many high-technology components. It's got excellent electrical conductivity, corrosion resistance, chemical stability, and superior heat shield characteristics. Platinum is found in medical equipment, computers, and automotive parts. And softer than platinum, palladium is a key element in catalytic converters because it can withstand oxidation in high temperatures. It's also highly conductive and is sometimes used instead of gold in electronics. So these precious metals, even though they have long been held as monetary elements, they also have industrial uses. Gold in particular also has a very heavy use in jewelry. In fact, 50 to 70% of all the gold that's above ground and held in various forms is 50 to 70% is in the form of jewelry. So let's look at why buy precious metals. The U.S. government has taken a pretty dramatic action since the financial panic of 2008. The Fed has been printing money wildly. The results so far have been mixed, but the effect on the national debt is obvious. So when you look at the amount of money that's being printed since the financial panic started in 2008, you can see there's been a tremendous increase in the amount of money being printed as the Fed has reacted to the financial panic. The debt of the United States, the public debt of the U.S. government, has also increased dramatically in recent years, and it will continue to do so as we continue to deal with the economic downturn, or the structural effects of the economic downturn of 2008. The Fed has been rapidly increasing the money supply, and we saw that in this slide, but at some point these record low interest rates that are near zero are going to have to increase to stave off inflation. When that happens, inflation happens, and we have a particularly weak or vulnerable economy, there's a concern about what our economy will look like. Will we move into another round of a deep recession within this economic depression that's been going on since 2008? Concern of future inflation is one factor pushing commodity prices higher. Commodities are these precious metals that we're talking about. Holding metals is a way of spreading portfolio risk during times of economic upheaval and war, and when inflation threatens. So a lot of folks are looking at these precious metals as a form of long-term investment that can preserve their wealth through economic turmoil. And if you'd like to know more about it, take a look at the website that's referenced below here, simplegoldira.rollover.com. There's a lot of additional information there that we think could be useful and helpful to you. Let's look at the price history. We'll start with gold. This is a chart that goes back to 2000, and you can see how the price of gold in dollars per ounce, shown here, starting about under $200, even as recently as 2002, and it moved to a high of over $1,800 just around 2011, and it's pulled back to around 1,300 cents. A lot of folks who are looking at the market realize that the Federal Reserve, as they've been printing money, also entered the marketplace and has been actively manipulating and holding down the price of gold. One reason for that is gold acts as a sort of like the canary in the gold mine, or the canary in the coal mine. And so the Fed realizes that, and they don't want the gold price to continue to rise because they need to sustain confidence in the economy. And so they've been actually actively entering the gold markets through the various organizations and arms that they have to work with, and they've been suppressing and holding down the price of gold. A lot of sophisticated investors know that. It's not really in dispute anymore with recent studies. It's pretty obvious what's going on, but how long that strategy can continue, that's quite debatable. Especially as the amount of money that's being printed, currency being printed in the U.S. and Europe and large economies like China and Japan continue to skyrocket. So concern for future inflation is certainly one factor pushing up the long-term trend in these precious metal prices. So let's look at the price of silver. This goes back to 2000 as well. Currently the price is around $19.50. It's been as high as over 40. It also has been historically a monetary metal, but it has tremendous uses in industry. There's a high demand in industry for silver as well. Platinum, well, this goes back to 1992. The red line shows the long-term trend, and you can see how even since 1999, where the price was about $400 an ounce, it's moved up to over $1,400, $1,500 today in that time. And just a steady increase, which makes sense because the currency supplies have been printed wildly and rapidly over the years. Palladium also, this is a 5-year chart, and you can see the increase in price from around $300 in 2009 to around $900 in late 2014. So you can see the long-term trend in the price history for palladium. So what are the ways to buy these precious metals? Well, there's stocks and mutual funds, and this is just holding shares in the mining company. That's one way to get exposure to the precious metals. Another way is to use exchange-traded funds that hold bullion. They are a number of ETFs. There's a gold ETF, ticker symbol GLD, a platinum one, ticker symbol PPLT, a palladium one, PALL, and a silver one, SLV. One concern with exchange-traded funds is they hold paper contracts for gold and silver. They don't actually hold physical. And in times of economic turmoil, it's really who is holding physical gold and silver, and it's not who has paper contracts representing some ownership interest. So another way to actually own the underlying metal to some degree is antique coins. Antique coins also they're called collectors or numismatics. Sometimes have a premium over their face value or the value of the underlying metal. They have a very high premium just for their collectability. That can be a very questionable investment because those premiums are often way too large to ever be a return for the people who buy them from dealers. So you have to be very cautious with that. Another way to own is bullion bars and newly minted coins. Newly minted coins in gold could be the American Eagle or the Canadian Maple Leaf. These are coins that are printed, but they're priced based on the value of the metal that they're made out of. There are ones in platinum and palladium and silver as well. There's a Canadian silver maple leaf and the palladium Canadian maple leaf. You can learn more about that just by referencing the website below, simplegoldira.rollover.com. They'll show you more information and links to companies that can help you look at bullion coins. So what is the outlook? Well, how much gold is there in the world? One of the most interesting facts for gold is all the gold that's ever been mined in human history. If you were to put it all together and take a look at it, think of the Washington Monument. That's a pretty big structure. The base is about 60, 80 feet on each side. And if you went 1/3 up the height of the Washington Monument, all the gold that's ever been mined in human history would fit in 1/3 of the Washington Monument, that bottom third. That's an indication of just how rare and the supply of gold actually is. So when you think of the rapid increase in these paper currencies that are backed by nothing, they're just being printed wildly. Actually, it's digital currency. They're just hitting keyboards on a computer to create more currency in the large banks. The supply of gold is relatively quite limited relative to that. So if you think about rapid increases in currency and then a very tight and limited supply of precious metals like gold and silver, platinum, and palladium, it'll give you an indication of what long-term price trends are. And that's what a lot of folks look to as they make decisions about where to invest or what to invest in, such as precious metals, investing in precious metals for long-term wealth preservation. The supply of gold is very limited in comparison. And what do you think will happen in the scenario where there's a very limited supply, but the currencies are being printed wildly? Just look again at the amount of currency, the money stock that's been put into play since 2008, and that upward trend is only increasing. So before buying a precious metal, you got to do your own research. If you decide to buy gold or silver or platinum or palladium coins or bullion, you need to have a safe place to store them. And you have to be prepared for volatility in the price. You could see that in the charts we looked at earlier. And it's important to keep a long-term perspective. Gold and other precious metals are a long-term investment. Many people are opting to set up gold IRAs so they can hold physical gold in their IRA for the long term. Other precious metals can also be placed into an individual retirement account, an IRA, or another form of retirement account. Physical gold held for the long term. To learn more about how to do this, how to invest in precious metals, visit the website that we link to below, Simple Gold IRA Rollover. It lists and shows many of the leading companies that can help you with precious metal purchases and how to set up accounts to hold gold, physical gold, for the long term to protect your wealth and protect your retirement. Check it out.